Today we're looking at a company that almost nobody on YouTube is talking about, despite the fact that it has quietly become one of the most interesting financial stocks on the market. The company is StoneX Group, ticker symbol SNEX. Now, at first glance, this doesn't look like a flashy business. It isn't an AI stock. It isn't a software company. It isn't a company that's making headlines every day. Instead, StoneX is part of the plumbing of the global financial system. And that's exactly why it caught my attention. The company has been growing rapidly, operates around the world, and yet still trades at a valuation that looks much more reasonable than many of today's high-growth stocks. StoneX connects businesses, institutions, investors, and traders to financial markets through services including trading, clearing, foreign exchange, payments, commodity hedging, and risk management. In today's video, we'll break down what StoneX actually does, why investors are paying more attention to it, the bull, base, and bear cases, and whether I think it's worth buying today. Let's get started. The easiest way to understand StoneX is to think of it as a toll booth operator for financial markets. Every day, businesses need to hedge commodity prices. Corporations need foreign exchange services. Institutions need trading and clearing. Investors need access to markets. Money has to move around the world efficiently. StoneX helps make all of that happen. The company operates through four primary segments: commercial, institutional, self-directed retail, and payments. As a result, StoneX earns money from many different types of financial activity rather than relying on a single product or service. And before we go any further, let's talk price targets. At the time of recording, shares are trading around $70. My bear case target is $55. This assumes growth slows significantly, trading activity declines, and investors decide StoneX deserves a lower valuation multiple. My base case target is $90. This assumes management continues executing well, earnings keep growing, and the market slowly gives the company more credit for its performance. My bull case target is $130. In this scenario, StoneX continues producing outstanding growth, expands globally, gains market share, and starts receiving the valuation multiple of a premium financial compounder. That means investors are looking at roughly 20% downside in my bear case, nearly 30% upside in my base case, and close to a double in my bull case. Those aren't predictions. They're simply valuation scenarios based on different growth outcomes. Now let's look at why those targets might be achievable. One of the most attractive things about StoneX right now is its growth. According to publicly available financial data, fiscal 2025 revenue reached approximately $130.9 billion, representing growth of more than 30% year over year. Earnings also increased from the prior year. That's remarkable when you consider the size of the company. Many businesses can grow quickly when they're small. Growing at this kind of rate while already operating globally is much harder. StoneX currently serves clients across North America, Europe, South America, Asia, Africa, and the Middle East through a large international network. The company has built infrastructure that would be difficult and expensive for competitors to replicate. Another reason I find the story compelling is that management has positioned StoneX to benefit from multiple economic environments. Think about commodity producers. Whether commodity prices are rising or falling, companies still need hedging services. Think about foreign exchange. Whether currencies are rising or falling, clients still need to exchange money globally. Think about trading. Whether markets are bullish or bearish, investors continue buying and selling securities. StoneX doesn't necessarily need markets to move in one direction. It simply needs activity to continue. That's a very attractive characteristic. In many ways, StoneX benefits when economic activity increases regardless of what's happening in individual asset prices. Another positive is valuation. Current market data shows StoneX trading at a price-to-earnings ratio in the high teens. For a company producing strong growth, that valuation does not appear excessive. Compare that to many technology companies trading at significantly higher earnings multiples. Now, obviously, StoneX is not a software business, so it doesn't deserve those same valuations. But it does raise an important question. What if the market is underestimating how durable StoneX's growth actually is? If earnings continue growing at attractive rates over the next several years, today's valuation could eventually look quite cheap. Now, let's talk about the risks because every stock has them. The biggest risk is cyclicality. Financial activity moves in cycles. Commodity markets move in cycles. Interest rates move in cycles. Transaction volumes move in cycles. While StoneX is diversified, it's still exposed to broader economic conditions. If activity slows across key markets, earnings growth could slow as well. Another risk is complexity. StoneX isn't a simple business. The company operates across multiple geographies, multiple regulatory environments, and multiple asset classes. That complexity can sometimes create execution risk. It can also make the company harder for investors to understand. And when investors don't understand a company, they often assign lower valuation multiples. Competition is another factor. StoneX competes against large financial institutions and brokerage firms around the world. The company will need to continue executing at a high level to maintain its growth trajectory. That said, management has done a solid job over the years. The company previously operated as INTLFC Stone before rebranding to StoneX and has expanded significantly through both organic growth and strategic acquisitions. Now let's revisit the three scenarios. The bear case is straightforward. Growth slows. Market activity weakens. Valuation contracts. The stock falls toward the mid-50s. The base case assumes continued execution and healthy earnings growth. In that scenario, I believe a $90 share price is very realistic over the next few years. The bull case is where things get interesting. If management continues growing earnings at an attractive pace, expands its global footprint, and investors begin viewing StoneX as a premier financial compounder rather than just another brokerage-related business, a $130 share price is achievable. That's what makes this stock intriguing. You're getting a business with growth characteristics, a reasonable valuation, diversified revenue streams, and global reach. At the same time, because StoneX isn't a household name, it may still be flying under the radar of many investors. And some of the best-performing stocks in history started exactly that way. They weren't exciting, they weren't trendy, they were simply great businesses that kept executing year after year. StoneX may be one of those companies. My overall view is that SNEX is a high-quality financial stock that deserves a much closer look from long-term investors. It's not without risk. But if you're looking for a company with strong growth, global diversification, solid fundamentals, and a valuation that still appears reasonable, StoneX should probably be on your watch list. Let me know in the comments what you think of SNEX, what your own price target is, and what stock you'd like me to analyze next. Thanks for watching, remember to like and subscribe, and I'll see you in the next video.